What's going on, guys? One sec. What's up, Anthony? Hey, what's up, man? We give it a few minutes, get people to join, and we get it started. This is crazy.
We basically have two countries that have been fighting so long and so hard that they don't know what the fuck they're doing. They don't know what the fuck they're doing. They don't know what the fuck.
So stupid. Yeah, like it was so wild today. Welcome, welcome, brother. All right. So we're just going to talk about the market reactions right now that we had for today. So the stock markets really didn't give us much, because ever since Sunday, and yeah, the remix is crazy. But ever since Sunday and Monday, we had a risk on market. So you guys remember over the weekend we saw that escalations did continue. That pretty much gave even. I'm pretty sure everybody was really surprised that the fact we didn't see a complete risk off market throughout the rest of Sunday and Monday. But markets pretty much like the idea of the de-escalations was going to come in place, right? So this is why we're continuously seeing equities push higher. But today kind of seemed like not saying that we just saw a risk off market, because it was just nothing with headlines today that suggested that. But it kind of gave us a little more of a relief. And also, for you guys that trade US 30, we just had a lot of downside pressure coming in from United Healthcare and Boeing. And plus the pressure downward from Tesla was impacting NASDAQ as well. So what's impacting equities right now? Right. So we already get in the idea that the Feds is leaning more into the cutting cycle. Right. We got the two Fed speakers that came out and said it earlier this week. And we're going to talk about after this what Jerome Powell was saying as well. Overall, U.S. growth is still strong regarding GDP, PMI data. Labor data is also still strong as well. And we're getting war tensions is also de-escalating. Right. So all of these things that is coming out is what's giving us that bias in U.S. equity markets like NASDAQ, S&P, right? Whatever ones you guys like to trade. I just want to put this here just in case, if we ever have reasons for weakness in equity markets, that's going to be if recessionary fears start to spike up again. We haven't gotten that because Jerome Powell just literally came out today and just pushed away recessionary fears, right? And that was yesterday, but that was the biggest giveaway. That was pretty much all. That was really all he said. That was a real giveaway, that he just has no recessionary fears is highlighted, which is really good for, just looking at the U.S. economy is really great. And also if the Fed stop the outlook of cutting rates, right? So if we see, if the Feds comes out with a hawkish outlook, right? What are the things that's going to contribute to that? Just higher inflation, right? So if we get higher inflation, that would definitely be a reason for equities to stop pushing higher. We get that bearish reaction. Or if weaker growth, that's like GDP, what we're going to get tomorrow. If we get a huge miss, it has to be something ridiculous where the recessionary fears has to be like when we get such a bad print that they're going to spike those recessionary fears. Something like that is something I would pay attention to for more downside. Also, war tensions, right? If we see that escalations between Russia and Ukraine starts to pick back up, Iran and Israel picks back up, right? If the U.S. gets involved, those are things that we look for downside in equities. And then also trade wars, more likely between China and the U.S. That's what the markets is really focusing on, is China's retaliation to how tariffs is going, which has been pretty quiet lately. I think anybody has their opinion. I believe that the war, pretty much nobody is talking about tariffs anymore because they're distracted by what's going on between Iran and Israel. So they got that breathing room to continue to negotiate without having tariffs impact the markets. All right. So that's something that regards to equities. So today, the only economic data we had today was U.S. home sales. It's more of an indicator, right? So we did get a pretty big, we had a pretty bad miss today, which prices came in lower. Is it worth a trade? No, but you could use these type of data prints as an indicator just to see how like consumer spending is going, right? Homes, like I said in the live call earlier, it's just the American dream, right? Home sales, people buying homes in America shows that the economy is thriving, right? When we see that it's taking a hit, we also want to pay attention to other indicators like FedEx, which also took a hit as well, right? So that all contributes to how consumers is acting in the U.S. But other than that, starting next week, tomorrow, with GDP, and on Friday is PCE is going to be the main focus. I'm going to talk about that in a minute. Gold. Yeah, I can see the downside. I like the downside, Daniel. What we're going to talk about the comments that came in today. Like always, I understand that it is a lot of noise, right? I know sometimes it's very hard to pick up a lot of the information. One sec. But any of you guys took trades today? The only one I took advantage of gold sells earlier, but I took profits quick. Like, what was your guys' trades for today? Win or lose, it really doesn't matter. But it's good to talk about it if you guys took some profits today. But while you guys right. So these are the important comments that we got from Jerome Powell. Yeah, like the U.S. is not in a recession, right? So that was a good indicator that does give us more influence in buying U.S. equities, which is a good sign, right? So what else he was talking about was the rate cuts. I felt like the Congress did give him very tough questions where he had to ask, right? Felt like that was pretty good. Usually he's being questioned by reporters and he just doesn't give nothing, right? He just try his best to just keep stability as much as he can. He's very good at his job. You know, he's very good at trying to give investors nothing to go on. But expectations, right? We kind of got the idea. Markets is already expecting, because inflation has been lowering. It's not at the 2%. It's pretty much what he said about how inflation is going. Is not really at that 2% mark, but it is declining, which is really good, right? So it does increase the odds that that the Feds are likely to cut rates, and expectations that a cut can happen next month, man. Like that would be pretty awesome if that comes into place, right? But the markets are forward looking, right? But that was why, you know, dollar, as you can just see right here, dollar, just put it up more. But that's the reason why dollar continued to drop for the session. You know, that to me, dollar was just the easiest opportunity. That's what made the most sense. All right. And important data coming up. Just going to speed through this. Asian session, nothing really important. London, no major data, but we have to focus on risk flows and just try to pay attention to news headlines. All right. New York session, we got Governor Bailey, the Bank of England, the chair, Governor Bailey is going to speak. I believe he's going to speak on monetary policies at 7 a.m. But also at 8:30, we got jobless claims and U.S. GDP data. So that's going to be the focus for tomorrow. So I put there also focus on headlines and focus on risk flows, risk on, risk off markets. So what we had overall for New York session, everything when it comes to news headlines, it's been pretty positive, right? So no reason to be expecting a complete risk off market. We've been having pretty good headlines moving forward. Just got these highlights from today, you know, just so that could help you guys get a better idea of how the testimony went. I know we went through it live, but it's like 2-3 hours, right? So I'm pretty sure none of you really watched the whole entire thing. But let me see, like it's funny because I don't think that the U.S. president have the power to fire a Fed chair. Right. So he already has somebody. Obviously, he doesn't want to say his name, I think, until September. But he already has somebody in his list of becoming the new Fed chair. But I don't think he has the power to do it. But that's going to be pretty interesting. This is the first time, like it's probably the first time in history that we've seen live beef between a president and the chair. Right. The actual chair of the central bank of that country. It's funny as hell that we're going through this live, but
they don't know what the fuck they're doing. Do you understand that?
You guys
do you believe that Iran is still committed to peace?
Yeah, I do. They violated it, but Israel violated it too.
Are you questioning if Israel is committed?
Israel, as soon as we made the deal, they came out and they dropped a load of bombs, the likes of which I'd never seen before. The biggest load that we've seen. I'm not happy with Israel. You know, when I say, okay, now you have 12 hours, you don't go out in the first hour and just drop everything you have on them. So I'm not happy with them. I'm not happy with Iran either. But I'm really unhappy if Israel's going out this morning because of one rocket that didn't land, that was shot, perhaps by mistake, that didn't land. I'm not happy about that. You know what? We basically have two countries that have been fighting so long and so hard that they don't know what the fuck they're doing. Do you understand that?
Do you have any kind of response to Iran?
All right. So this was like yesterday, right? So as soon as he had he came out to everybody that, you know, there's going to be peace between Iran and Israel. Right after he said that, it was supposed to be 12 hours of peace, right? Right after he said that, they was literally bombing each other. I feel like the markets is definitely not caring about the fact of them actually, you know, shooting missiles at each other. They're not caring about that. The markets actually is reacting to the de-escalation part of it, right? So the markets is kind of like the markets is kind of telling us that they're trying to get over this whole situation. One sec. But hey, this is where the opportunities come and lies, right? So when it comes to the markets, right, we could just look at gold. Gold is a very good indicator also, just to give us the idea if we're going to deal with escalations. Like obviously, if we see that tensions is rising, we're going to see gold rise, right? Markets is going to invest in it as a safe haven. If we see gold pushing lower, a lot of volume pushing lower, that's called, you know, we understand that as being more de-escalation. Kind of the giveaway was yesterday when there was supposed to be peace and they were still firing at each other and the markets did not react to it, right? But we are getting consolidation. I personally, my opinion, I don't think it's going to end. I think they're going to continue this whole bullshit, and I'm pretty sure you all agree. One way or another is either going to be Israel starting it. It's a possibility because I'm still getting in my terminal that Israel is saying that Iran is still attacking them, and they were saying that all through today. And Marcus is not reacting to it, but how are we going to know what's true or not, right? So we just have to be cautious about fake news, right? We have to be cautious of those type of reactions of fake news, all of that stuff. That's why I suggest you guys just follow Trump on his Truth Social, because usually that's where a lot of his, like, if he's really saying something, that's where it's going to come out on. It's going to come out on Truth Social, guys. All right. It's not going to really come out anywhere else because it's very hard to know what the hell is really going on. Okay. But as we can see so far, when it comes to gold pushing lower, we got the idea of the de-escalations. The only way I personally think is going to be a good opportunity to buy gold is if China escalations come up again regarding tariffs. If China comes out and say that the framework is shit and there's no way they're going to agree to it, I think that's going to start up that new market fear again. So it's just been quiet for a while. We already know that China didn't like how the U.S. Participated in attacking Iran, right? We already saw those headlines regarding China with that. So it's more likely whenever these tariffs and negotiations come back up again, that's something that we're going to have to pay attention to, right? Just waiting for those China headlines on the framework, because they've been pretty quiet about it lately. Are they still investigating behind closed doors? We don't know. But the timing of it is going to be very random, right? Because gold is just very sensitive when it comes to those headlines. All right. And I know like this week has been pretty quiet, like pretty, it's just, we just had the beginning of the week. That's what we had. But after that, we just see more choppy price action. So it's okay to be patient, right? Waiting for a clear edge, waiting for a clear reason for an opportunity. And that's going to be with what, right? If we get a headline regarding tariffs with China, like I said, or if we see, like, I like the idea because tomorrow they're going to have an agreement. Like, so Iran is supposed to sign an agreement. I believe I believe they said like next week, if I'm not mistaken, but anything could happen within that time. Right. But at 8 a.m., we understand that the White House is going to do another briefing, right, regarding this agreement that's going to happen. It's most likely going to be about them not having no nuclear weapons or them not even attempting to make any no more. If Iran agrees to it, I don't really see a reason for gold not to push lower. But understand intermarket analysis, guys, right? So I wouldn't recommend selling gold now. Do y'all guys understand why gold is pushing higher for the day, even if there's de-escalations? See if you guys studied or if y'all took the course. Give me 1 second. Yeah, exactly. So the weakness in the dollar and the weakness in the yield, right? So I don't I don't look at that for an opportunity to buy gold, right? But you can from like a scout perspective, but it kind of gives you a reason to say like, okay, well, let me not rush into sales yet, even though we have reasons for it, but understanding the intermarket analysis part, right? That's what really could help you just be a little more patient, right? So just always try to, because it's been a while since we've seen it correlate, right? Like inverse correlate, right? We see that the yields in the dollar pushing lower. We see that gold is pushing higher, right? It's been a while since we've seen that and it's been probably like 2 months. Same thing with CAD and oil. Lately, we've been seeing CAD correlate with oil. We haven't been seeing those correlations into market analysis in a while, right? So I still ideally like gold sells, but it's probably not going to be as volatile as how Asian session used to be back then, but I still like the idea of gold sells, right? Because everything that is supporting gold sells is still valid. But just be prepared of intermarket analysis. Just focus on risk sentiment. If we have a risk on market, we understand why, right? That's just the main goal. I understand why is there a risk off market. But even if you're looking at USD JPY, I just I have the futures, right? So like, even though the yen is supposed to be weaker, right? But how come the yen is gaining strength? So it's the same idea, right? The weakness in the yields is strengthening the yen currency. So that's just giving us an idea about what's really going on with the market. So it just kind of gives us, like, if I'm looking at GJ, right? And I'm like, okay, there's a risk on market, but obviously you could just see buying GJ today just probably wasn't it. We just consolidated because of the yen strength, even though that the pound is stronger. So using those tools, it just helps you be a little more patient in when it comes to the markets. All right, guys. So we're just gonna continue to watch Jerome Powell's testimony, right? Because it's important. I feel like what he said today kind of gave the markets that indicator that we could be anticipating a rate cut happening sooner, right? And this is why the dollar, I said over the live call, the dollar was the best opportunity for today. That's what made the most sense, was selling the dollar after his speech, right? Because he kind of gave us a little bit of those hints. That's why I felt like the Congress they pressured him. They did him dirty, right? They made sure that they try to get something out of him. And he did. He kind of gave us the idea that cuts is likely going to happen if data supports it. But he's still having his uncertainties from tariffs, okay? So we're just going to listen to what he says, very quick videos, just give you a few highlights so you guys could just like get better with, breaking down these details and getting good with it, man.
To a recession. Chairman Powell, the latest FOMC statement described economic activity have to continue to expand at a solid pace, and you just reiterated that in your testimony this morning. In your view, is the term recession and the economy growing at a solid pace, are those synonymous with each other?
I would say no.
And you note that the labor market continues strong, the economy's at a standard pace, and you also referenced in your testimony that first quarter GDP initial react was also from front-end loading, as you noted, imports to try to avoid tariff impacts. Also, I looked at the Atlanta Fed GDP Now model, which forecasts GDP growth for the second quarter of this year at nearly 4%, with core GDP forecast at 2%. Does that Atlanta model suggest a recession to you?
No, I would say it doesn't.
So in looking at your remarks about tariffs today and then the ones that you made during March and April, I was looking back at a Fed study that noted that up until March, tariffs have already been partially passed through in consumer prices, leading to a contribution of merely 1/10 percentage point increase in core PCE prices. A Fed study Harvard that noted that up until March showed that prices have only modestly adjusted since the announcement of tariffs. Finally, the longer-term inflation expectations remain consistent with the 2% goal. Governor Waller laid out a pathway that allows for rate cuts provided that average effective tariff rates remain close to 10%, or I assume he means 10% or lower. The labor market remains solid. Prices continue to disinflate. So given that data I've outlined, I'm sure data that you're very familiar with, for the economy to avoid persistent inflation, do you concur with Governor Waller that there is a pathway for good news as it relates to the regulatory policies, the tax policies that I've discussed in a world with lower tariff rates?
So first, I wouldn't comment on any other FOMC members' comments one way or the other, but I will say this. I think many paths are possible here, and certainly the one you mentioned is a possible one. We could see inflation come in not as strong as we expect, and if that were the case, that would tend to suggest cutting sooner. We could see the labor market weakening, and that would also suggest cutting sooner. On the other hand, if we see inflation coming in higher, or if the labor market were to remain strong, then we would probably be moving later. So I think a range of possible paths are possible, and certainly the one you mentioned is one of them.
In February of 2021, you told us in this committee that you would stay in your lane and not comment on President Biden's proposal for the American Rescue Plan or sharply increasing federal spending. And, you said it was an issue, but that you would stay in your lane and not comment on it. But here in this year, you have commented on this idea of tariffs being set by the executive branch. So are tariffs in your lane, but a huge fiscal spending by the Biden administration not in your lane? Explain to the committee why you chose to be silent in February of 21, but outspoken this spring.
Sure. So we haven't commented, and it would be inappropriate for us to comment on the policy of tariffs. We don't have a view. It's not our job, and we just wouldn't do that. And just as we wouldn't comment on the reconciliation package that you're working on right now. We're not commenting on tariffs. What our job is inflation, keeping inflation under control, and also keeping maximum employment. And when policies have what appear to be short and medium term implications, meaningful implications for that, then they kind of, not the policies themselves, but the inflation becomes our job.
Yeah.
Yeah. So like overall, you could just see that they're still like, it's just him, but you could understand how people is thinking that he's taking it personal against Trump, right, and his administration, because most of us live in America. We're seeing how consumer spending is on a daily basis, right? It's really not as bad as probably what it was last year. Gas prices is coming down, as we all see. He's also saying like inflation doesn't have to be 2%. And he said this before. It doesn't have to be at 2% in order for us to cut rates. Inflation is still declining. There hasn't been a print where it should give them actual scares, right? And I think he slipped up because in the last FOMC, he did confirm that the uncertainties on tariffs was actually leaving the economy, leaving the markets, that the uncertainties is not as bad as it was in April. But now what's really holding him back from being an actual dove, right, is because of they're expecting spikes in inflation moving forward, like pretty much in the next coming months. And there are, I could show you guys too. Let me see. I believe I think I probably deleted it, but I know there was one of the reporters that was saying that, like we're seeing upticks in like toys, right? Inflation spikes in toys. It's just like little stuff like that where they're actually seeing the consequences of tariffs, right? and we're still dealing in a pause. So which does make sense for him to act in this way. But we're in the markets now, they tend to not listen to the chair, right? And the markets is just, the dollar was pushing lower no matter what, because we understand that they're not going to hike rates, right? So dollar, even though that Jerome Powell is being a hawkish, pretty much a hawkish pause, right? That's his policy. The markets is still pushing lower with those expectation that the rate cuts is going to happen sooner.
As he said, about how they figure out how to deal with it. That's why he's responded by holding steady. You know, the Federal Reserve, of course, reserves the right to do a couple of more cuts later this year, certainly less than what President Trump would like. But President Trump also weighing in over the past couple of days, saying that
Trump wants to
Powell's time could soon be up, over, which is true. His term will be up in the not so distant future. And President Trump also saying that he has 3 to 4 people he's already thinking about to replace him, Nancy.
And Julie, on another note,
and it's just to give you guys an idea, right?
Now,
I liked his guys'
as
questions
recently
where
as yesterday, Fed Governor Bowman indicated that if inflation pressures remain contained, the Fed should consider lowering rates, and said she is open to a rate cut in July. Governor Waller said very much the same. Do you believe that we are in a position where we may be able to cut rates in July?
So I would say this. I think if it turns out that inflation pressures do remain contained, then we will get to a place where we cut rates sooner rather than later. But I wouldn't want to say, I wouldn't want to point to a particular meeting. I don't think we need to be in any rush because the economy is still strong. The labor market is strong. If we were to see the labor market, meaningfully weaken in a way that was concerning, that would matter for that decision.
So
if we see inflation, continuing not to move up, we hadn't expected inflation to move up much. We do expect it to move in the summer, and if we see it not happening, we'll learn from that.
The September 2018 Teal book suggested that the Fed, seeing through tariffs, inflationary effects,
that's why
is an appropriate response so long as inflation expectations are firmly anchored and that the pass-through costs are relatively short-lived. Would you agree that this assessment from the Teal book still applies to today?
I would. Those are the exact factors that we cite when we talk about this situation, plus the size of the tariffs.
Right. So let's assess the current economic situation. The Monetary Policy Report states that longer-run inflation expectations, quote, continue to be broadly consistent with 2% inflation, unquote. And a Harvard study argued that despite the relatively quick price responses to tariff announcements, the overall magnitude of these changes remains modest. So if these conditions hold, is it not unreasonable to think that underlying inflation trends should continue its path towards 2%?
That's certainly a very defensible position. I think what others on the committee think, and what I think is that this is a question we need to be careful with because it's different than it was in 2018. The difference is that we haven't had 2% inflation. In 2018, we hadn't had an inflation as high as 2% for a decade anymore.
Right.
This is a different situation. We haven't fully restored price stability, and another shock. We have to be careful. If there's a meaningfully large and sustained inflation shock, we have to be careful about that. And so, I think we're just trying to be careful and cautious, and we really think that's the best thing we can do for the people that we serve. If that happens, we need to be there for it. And so, we're in a difficult situation in deciding exactly when to move. But again, if we continue to see inflation come in, and not prove up at the higher levels than we expect, then that would matter for our decision making.
Chairman Powell, economist John Taylor once noted that the Federal Reserve should deviate from its own Taylor rule in the event of an oil shock, similar to the tariff scenario. A one-time price increase from an oil shock should not be accompanied with an increase in interest rates. But that's just
to give you guys,
do you agree with that?
The idea of how, this is how, just paying attention to those meetings, just the importance of it. I know it's long and it's dragging, but it gives you those hints, those little ideas that you could pay attention to that could lead for opportunities, right? Because he's kind of given us what he wants to pay attention to, right? So if I ask you guys, what is it that he is looking for in order to start cutting rates, right? What is it that he said that he's going to pay attention to in order to start cutting rates, right? So the first thing that should come to your head is labor data, right? So if we start seeing weaker growth numbers, right? And then what is that? Unemployment claims, right? We get that weekly, like every Wednesday and Thursday. We got it tomorrow. That every first Friday of the month, we get NFP, right? So those are the signs that would lead to a cut if we start getting a miss in data. What is also, he's talking about weaker growth because the growth is strong, right? So if we start seeing a little down, like that's what's going to force them. It sucks to say it, but he wants to see people, like he wants the economy to struggle a bit, right? That would give him the confidence, like, okay, now we can start looking to cut rates. But markets is already ahead of him, you know? So when we back up and we talk about the dollar, right? First of all, like the dollar's been dropping even way before this has been going on. The reason for the dollar downside, right? They were saying, because they asked him the question of that today, like, what is your thoughts on why the dollar is falling? He obviously didn't want to answer it. But we saw that the dollar started pushing lower when tariffs started, right? Because they was actually questioning they was actually questioning would the dollar still be the world reserve currency. We needed the Fed, we had to have Jerome Powell come out and say that the dollar is still going to be the world reserve currency no matter what. But investors started pushing out of the dollar, right? Because of the uncertainties when it came to tariffs and plus the debt deficit, right? All the stuff that is going on with physical policy. Investors is not trusting the dollar, right? So that was giving more reasons for dollar downside even before the markets was just anticipating a rate cut to happen anyway. Also, I personally feel the reason for a weaker dollar, it has to do with the tariffs on top of that, right? Weaker dollar. At that time, it was making like, because every other country is traded in dollars, right? Euro USD, pound USD, Australia dollar, right? The Chinese yuan. So with the weaker dollar is making their currency stronger, right? Makes it more expensive for their exports. So with tariffs, right, if he's trying to get the companies actually just start building in America, it would make it a lot easier for the U.S. by having a weaker dollar. So I felt like that is a part of the plan as well. That's why you never hear him talk about a weaker dollar. You never do. And then he wants rate cuts on top of that, which is also going to weaken the dollar. You know, so I think it's all part of their plan. Obviously, they're not going to give us any details why, but I feel like that is all a part of why that is happening. All right. So opportunities tomorrow is going to be looking for the dollar, but I know you guys love gold. Hoping this is the next leg for gold or a small L. I mean, you entered a trade already, Daniel. Like, so what I like gold where it is right now. So just remember the dollar, right? Just pay attention to the yields on the dollar. Hopefully we don't get no like real impulsive spikes that comes in place. But again, I would say focusing on headlines, right, guys? So just let me see so far. We don't got any news. So I put the live stream up in the Discord after this. But so far, we don't really have anything. So we should be good when it comes to news. But what we're going to focus on, again, still pay attention to headlines, right? I would say that if you're trading technicals, understand that it's 50-50. There's no real reasons behind the moves. So when you take a trade, you're just going to focus on a break of structure. But ideally, what I want to see for sells on gold, if we could stay below this price of 33.41, if we start breaking below that area support, right, I want to see if we could extend to this downside around 33.35. That to me would be the first take profit. If we could get any lower, that would just be extra. All right, guys, that would be the second area. If we see somehow the dollar and the yields just continue to melt, right? If it just continues to melt, a buy area would be above 33.54. I would say that would be the best target to take buys, and then try to take that scalp at least to 33.60, because the only reason why I would see gold pushing higher, again, it's going to be because of weaker dollar and weaker yields. But when a news headline comes out, you know, like it's just going to be random. Are we going to really know if we see some escalations, it's a possibility. You know, we could get the escalations that comes out, and that could lead to more upside, taking those gold buys with reasons behind it. But if not, you know, I still like the idea of gold sells, as we got a lot of optimism coming into the markets. All right, guys. So that's what I would focus on. And I will see you. Yeah, that's pretty much it. I'll just cover it. Just a quick market update. If you guys are good, just put a 1 in the chat. If you guys have questions, like, now is a good time to ask. But other than that, I'm going to trade live tomorrow. I'm going to look for opportunities tomorrow. So trading GDP is going to be my opportunity. And Friday, I'm going to look at PCE. So I'm going to probably look at those 2 opportunities for the week. Me personally, I'm not going to really force anything unless it's clear. Like, I'm not going to just take only technical trades unless I get a reason in the markets. All right. So I'll give you guys 5 minutes. If you guys have questions, now is a good time. If not, I'll see you guys. You can message me on IG if you have questions. All right, sure, good. Harold, good. All right, guys. Good. See you guys tomorrow.